All right, guys, welcome to the highly anticipated opening price theory series. And this is going to be episode one. What is OPT? What is the opening price? Is it important? Why do we use it? Is it relevant in our contemporary trading strategies? And how do we apply it in the market? So you're going to pay attention, bear with me, pay attention, listen carefully, right? Erase everything you think you know. Yeah. I kindly ask that you erase everything you think you know and try and just be humble enough to listen. Some of you know more than me, and that's great, that's fine. Some of you are way advanced, but there is something that just keeps you stuck. It just keeps you stuck in this video, right? So pay attention, please. Get your journal if needed. Save the video if you want. Share it to your community if you so wish, right? And do subscribe if you feel that you got value. However, you can simply abort. So what is OPT? Before we delve in, if you are seeking to get a deeper understanding, a deeper light into trading candle fractality, understanding, quote unquote, candle fractality, understanding the concept presented by ICT, understanding the remodified concept presented by Romeo, you have to pay attention to what I'm about to say. You have to listen to me, right? So let's get into the nitty-gritty of the day. No time for bullshit. All right, so what is OPT? Now, the opening price, or the OPT, simply stand for what? The opening price theory. As you can see right here, this is the idea that every single candle that is fully governed, right, irregardless of the time frame, every single candle, irregardless of the time frame, is a self-contained range that is what? Fully governed by what? The opening time. Every single candle. Because these candles are printing at their own pace, their own speed, their own time, depending on what? The time frame, right? So you have a 1 minute candle opening and closing depending on what? The time frame. So you're going to notice that the 1 minute candle opening and closing is going to be way faster compared to what? The H1 candle, right? So they are opening and closing depending on what? They are opening what? Time, irregardless of the time frame that contains them, right? So the opening price acts at what? The central axis that determines what? The entire direction of the candle, the intent of the candle, and also logically provides you what? Reference points. Now, one of the reasons I feel like, or I know that you should listen to me is because I've been trading this. I've been trading this quite some long. You can check the Telegram group. The handle is going to be in the description thereabouts. We have gone weeks in the Telegram handle, which I often don't do. Calling price, daily candle price, right? Disclosing buyers and giving what? The footprint to how every single daily candle is going to form and what? Where it's intended to do what? Deliver into. All these things are not either guesswork or luck. There is a knowledge that propels their ability to do what? Predict the exact what? Delivery of a candle. I know when a candle is going to expand and I know when a candle is going to range. I know when a candle is going to ridiculously what? Expand. It's two different things. When a candle expand and when a candle ridiculously expand. I also know when a candle is going to do what? Not expand, but give you a reversal. That's what I intend to expand Please listen to me and pay attention to this. This video is going to save you a lot. This video is going to save your trading career. It's going to give you more clarity. Now, it determines what the central axis of the direction of the candle. Three things, pay attention. It determines, the OPT determines what the direction of the candle, the intention of the candle, and also provides you what logic valid reference points for entries. Towards the episode 3-4 about, I'll be talking about the entries, the exits, and the criteria we look into to do what? Frame a structured what? Entry what? Checklist when trading what? The opening price concept. Right? So moving on, this concept actually holds what? Three core principles. The price reveals the direction. The opening price reveals what? The direction. We're going to get to examples, so pay attention. The opening price is the trigger. The opening price is also what? The key level. Right? So I've gotten tons of questions. What is the key level when you are trading OPT? You are hearing it for the first time right now. The opening price is the key level. This is the enigma. This is literally the what? The footprint of smart money. Every candle has an opening price. And that opening price rallies to create what? A high. And the closing price creates what? A low. So the opening price is what? Is the market intention made visible. Every high, every low, every expansion, every single price delivering from one key level to another, from the journey of key level A to key level B, from one particular axis, from a particular support area as you call it, or to a particular resistance area as you call it, is actually what? A candle fulfilling what the opening price has already what? Promised you. If you only could read it. And that's where the problem lies. Tons of us cannot read it. So if you only could read it, you'll be able to do what? Not get perturbed, not get shocked, not get surprised when price deliver into a particular what? Target, or price delivers into a particular what? Axis. And this is very, very important. Especially my audience, especially are what? The range traders. The remaining types of what traders you have there with no form of what derogatory statements, such as the SMT traders, support and resist, basic price action, amazing set of what traders. But I feel that if you are going to excel more, I actually know, if you're going to excel more as a range trader, quote unquote, as a CRT trader, you need to pay attention to the opening price theory. You need to pay attention to what I'm bringing to the table. You need to pay attention to what I'm remodifying what in this day and era. And that drives us into point number 2. There are two sequences for reading the opening of price. There are two sequences for that. Let me readjust this. Two sequence for what? Reading the opening of price. The first one is what? Every bullish candle gives you what? Opens what? You know the answer. It does what? It needs to open high. Every bullish candle needs to open low, rather, and every bearish candle needs to open high. The reason the algorithm works in such what time sequence format is this. You need to do what? You need to give the dumb retails. Both of us are retails, but they are dumb retails. You need to give dumb retails what? A slight moment of euphoria. Right? You need to give them a slight moment of euphoria. So if the algorithm is processing to do what? Deliver price into what? A bearish target. It's going to first give a euphoric feeling for the dumb retails to join a particular buy, and that's what propel price to do what? Open high. So as price is opening high, the dumb or the not so informed, as the case may be, are participating in that high, where the smart are actually what? Waiting for what? Price to breach the opening price before it does what? Expand all the way to what? The bearish target, because they know that every bullish candle has to start as a sell candle, And every bearish candle needs to start as a buy candle. The reason for the antagonistic view is so that what? Dumb retail can be trapped. Dumb sellers, dumb buyers can be trapped. Uninformed traders can be trapped. They need to be trapped. So in the process of trapping them, that's why we have the false move. So if you want to sell, if you want to have a bearish, if the candle is a bearish candle, or the candle wants to deliver what? Into a bearish sequence, it needs to give you what? A fake buy. And it needs to also give you what? A fake low if it wants to do what? Buy. So these are the two sequences for reading what? The opening price. The open, low, high, close. That's the sequence for what? Participating what? In a bearish leg. And that's the open, low, high, close for participating what? In a bullish leg. And the open, high, low, close for participating what? In a bearish leg. Very, very important. And this is the core example of actually what I'm talking about here. So you have this particular bullish candle right about here. And this is the opening price of this particular bullish candle. Price open, and the first thing it decides to do is to do what? Create a low. This is where all the dumb retail, the uninformed traders, this is where they are participating in. This is the false leg. This is the false hope. This is the false euphoria, the false trap, the view on's profits, as you call them. This is the leg that does all those jobs. So it opens low, comes back above the opening price, expand, then close. This is the sequence for what? A bullish expansion what? Candle. The opening price will start it, and the closing price will end it. So you want to be buying low on a bullish candle, or buying at the open, then be selling at the high, or be selling at the close. This should never get old. You should pay attention to this. Pay maximum attention to this. Why for a bearish candle or a bearish what? Sequence, price is going to open, then make and give you a false high. That's the goal. Price is going to open, then give you a false high. After the high has been made, price is going to do what? Use volume or expand all the way what? Into this low before deciding to close. So you have it like this as a single candle on the higher time frame, then you have the structure move like this on the lower time frame. Open, high, total soup, SMT, boom, expansion, close. Why for bullish? Same thing. Open, low, total soup, SMT, if there's SMT, boom, expansion, close. These are the sequence. It should not be what? Mislabeled or misprioritized. And these are very, very important when you scale across trading range for specific candle range trader set of people, right? It's very, very specific. Now I want to show you how to do it. Apply the OPT to range. I want to show you how to apply these mechanics, these core candlestick mechanics, candlestick fractality to what? Trading range. Like I said, this is simply episode 1. There is a whole lot ahead. So you need to stay tuned and listen to me. I know you are tempted to feel like you know it all, but trust me, the source is yet to come, right? The source is yet to come. Now, how do you apply the opening price theory, the opening price concept, when trading range? What role does it play? What's the main purpose, the crucial role this particular concept plays when trading range? And I'm going to show you. And this is going to be one of the paramount reasons your CRTs fail. Yes. There are 2 reasons, quote unquote, by the author who remodified CRT, right, that CRT failed. Number 1 is what? It has hit 50%. And number 2 is what? There is SMT. But there's a particular reason CRT failed. Now pay attention as I'm about to show you. Is when you don't understand how to apply OPT to range. When you have a bearish CLC, a bearish, sell CRT right about here, you have candle 1, you have candle 2, then you have candle 3. It is paramount. Please listen to me and pay attention. I'm going to save your life. It is very paramount you understand how candle 3 opened. It is very important you understand how candle 3 opens. You have been taught to sell the weak, and you are not wrong for selling the weak, right? But you need to understand where price actually opened, because the opening price is actually greater than what the highs and the low. The opening price creates the high or creates the low. Do you understand? In a bullish scenario, the opening price creates the low. In a bearish scenario, it creates what? The high. So if you are participating in what? This range, your traditional 3-candle CRT 3D trade range model, C1, C2, C3, you have been taught to do what? Sell the top, sell the weak, and do what? TP at what? This particular what? Sell size liquidity low of what? C1. And you are not wrong. That's perfectly, that's accurate. That's how it's done. But however, you need to understand there are one particular criteria, and this is where the opening price comes in view. This is the core concept that does what? Gives you a confirmation of what C3 will actually do. Because C3 can do one of two things. In this particular example that I'm about to reveal to you right now, C3 can decide to do what? Open, take this low, and expand. Thereby, what will happen? This your sell range or your sell CRT candle you have right about here is not fulfilled. It's ignored. It becomes invalid. Then you ran about X, telling everybody that the concept doesn't work. However, you were not paying attention to how price opened. How price open is greater than the highs and the low, and this is exactly what I'm trying to say. If C3, because you are having a bearish organogram, a bearish what program, you are expecting a bearish what sell side delivery. So if C3 opens and makes a low, just like this example right here, C3 opens and decided that it's going to make a low first. This was the low put in place by this C3. It simply means that what? Your position or your what bias to extend price or expect price to deliver all the way towards this particular sell side liquidity for C1 becomes invalid. It becomes very invalid because price is not going to do that. Why? Because price has broken the law of delivery. And that law is embedded in what's the opening price theory. Price needs to open to make a low. Price needs to open to make a high, just like this example right here. This was the opening price, and this was the high that was made, this particular high that was made. So this is the core reason why your range fails. Oh, not because it hits 50% or because there's SMT. This is the paramount, number one ranking reason why your range fail. This is why your CRT doesn't work. Amazing concept, but this is why it doesn't work. So you need to understand how C3 opens, not just C3. If you have a range in view, type 1, probably accumulation, then you're expecting distribution from C2. You expect C2 to manipulate, right? And expect you to distribute all the way to the low. You need to understand how the candle opens. It's very important how it opens. So if I'm expecting a bearish target, this particular candle, which is my delivery candle or the candle that I'm going to do what? Click to participate in what? This particular trading checklist. I need to see this candle open and make a high first. If it opens and makes a low, it has invalidated the law that brings about the sell side delivery to fulfillment. You are bought, or you do what? You flip your bias. This is why we're not married to bias. I don't care. You're not married to any bias. You're not married to any bias. I'm only married to the bias that's what the opening price gives the footprint of. So if the price opens, and in this scenario, price opens right about here, because I'm expecting a bearish sell side delivery into this particular low, but price opens and decided that I'm going to make a low first, I become very bullish. I flip my bias all the way to this particular high. This has become my what valid range. Yes. So this is the reason your range fails. This is the reason your what? Your range fails. Now we're going to talk about, last but not the least, before we call this a conclusion, we're going to talk about the role of what? Time. Time is greater than price. Time is this. Time is that. What is so important about time that everybody seems to be saying one particular sequence, one particular phrase, one particular sentence, but nobody is seeming to do what? Perfectly explain what it means when they say time is greater than price. Nobody. Nobody can tell me why time is greater than price. Credit to Trader Dai, right? The quarterly theory founder, right? Amazing personality. Now, when you are dealing with the opening price, what? Concept. You need to understand that what? The opening price itself, pay attention to what I'm going to say. You need to understand what? That the opening price itself is a time embedded strategy. It's a what? It's a time based strategy. Because everything is finding expression the moment what? Price or a new candle does what? Open. Every other thing will start doing what? Finding what? Expression. Until a candle opens, every other thing is what? Is useless. Like I said, every candle has what? An opening price that creates the high. An opening price. Now, I want you to erase that word price to time. An opening time that creates a high. Highs are formed at key time. Lows are formed at key time. What is the best? I'm literally showing you that the best, what you call time is greater than price, is actually embedded in this particular little concept. Because it's what is the market intention. It's made visible. It's visible. It's the market intention to give you what? The nearest hint, the nearest footprint to what price is going to do next. That's what it does. I'm going to show you an example that occurred on Friday. Then we're going to wrap it up. An example that occurred on Friday on XAUSD and XAGUSD, which are the core basic two pair that I trade. Every other pair is bullshit. Now look at this. Look at the opening price. Pay attention to this. I'm going to do this on the H1 time frame. Session break. Perfect. Time is greater than price. I want you to look at this. Look at this. This is the source. Listen and look at this. What are you seeing right here? This is the opening price. This is the exact opening price. What? On Friday, New York time, right? New York time. This is the exact opening price on Friday. Price opened, and the first thing price did was to create a high. Right? The first thing price did was to create a high after it's opened. I'm not talking about the midnight opening. I'm talking about what? The 1800 opening on XAUSD. I think it's 1700 for currency, etc. and etc. Right? So price opened and made a high. How are you sure price made a high? Let's go to a lower time frame so you can see this. Does this make sense? Price opened and made a high first. I don't know if it makes sense, but just look at this. Look at this, is beautiful. Price opened and made a high. This is the direct sequence when we speak about what? A bearish order flow. Price opening to make a high. You have tons of people buying around here. Yes, I can tell because I was on X and I saw a bunch of them. You have tons of people buying around you and expecting that price is going to do what? Rally all the way. Some of them, but ooh, they were cooked. Now let's go to 30 minutes time frame. If you were cooked, you simply lacked knowledge. However, you need to be humble enough to learn and listen. Now let me show you this. You have people that bought around here. There are a set of traders that bought around here. You call them the SMC trader. Amazing set of people, by the way. You have a set of people that bought around there, and we're expecting the price is going to rally all the way into this particular high right about there. But guess what? Price opened, right? This was what? This was a Thursday price action right about here. This was a Thursday price action. So price opened right about here. And on Friday, they forgot that what? The OPT is actually what? The roadmap. That's the footprint of where price is going to head to for the day. Remember I told you that the opening price what? Creates the high. And the closing price does what? Creates the low. So the opening price in this example, this scenario that happened on Friday, created the high right about here. And there was SMT with this FVG on what? Silver. Silver filled up, pardon me. Silver filled up that FVG. XAU did not fill it up. Yeah. If you check, let's check. This was the attempt. As you can see, filled it up. But XAU did not what? He did not fill it up. He ignored it. So that was SMT. Perfect. So as I saw that what? SMT has already transpired and price has already what? Created a high. I know that we are bearish. So I needed what? A closure. And this is towards episode 3, episode 4. I'm going to start talking about the entries. So I needed a simple closure to do what? Enable me participate in this displacement to this what? To the downside. That was all. Then my stop loss right above here. Not the FVG. Remember, it has been what? Filled in XAG USD. So I expect gold not to do what? Have anything to do with it. It should be a breakaway gap. Right? So and what simply targeted this low initially. Targeted toward this particular previous day low. And guess what? After the high was created, look at what happened. The low was made. Ridiculous. This is ridiculous. The low was made. The high was created at the opening price. Price came back into the opening price. Respected time. This is 9. This should be 9 a.m. 9 p.m. at a respected time. Now, time is irregardless in this particular factor. I'm talking about what? The particular opening price. I want you to see how price came back and tapped into the opening price again. Then does what? That was the propeller. So news is only a catalyst. Yes, smart money will always give you the blueprint. They will always give you the hints. Whatever they're going to do after that, NFPs, CPI, no farm, whatever, they're going to follow the blueprint of smart money. And that will be all for now, folks. I do hope you find this very, very enlightening and very, very insightful. And I hope to see you on the next episode, and it's going to be pretty much amazing. So you can kindly join the Telegram handle. Link is in the description. And see you when I see you. Peace out.